Hey everyone, it's Simon here. Welcome to your Tau Daily video for Tuesday the 14th of May 2024. If you were to look at the major indices yesterday for Monday's activity, you'd think it was a snooze fest. S&P was flat, NASDAQ was basically flat, not a lot happening, at least at the index level. But oh boy, are we back in terms of meme stocks. So Roaring Kitty made his first Twitter post after a 3-year hiatus. He's been posting memes, would you believe? And that put a rocket under GameStop yesterday, which closed up 75%. It was up almost 120% at its high, above $38 during the session, before settling at around $30.45. Obviously, volume in the stocks spiked massively. We also saw high volume in options as well. There was a lot of volume going through in options expiring this Friday, particularly with the $30 and the $34 strikes. Okay, the $30 strike options seem to be changing hands for around $6.50. Obviously, the break-even price at expiration is $36.50. All right, so GameStop's got to be at $36.50 or above for those to break even. The $34 calls were trading at around $5.65. So the break-even at expiration there is $39.65. You know, getting close to $40. Obviously, very speculative, particularly as they've only got 3 days to expiration. But looking at the activity in GameStop and AMC, I mean, you'd have to conclude that financial conditions are not very tight. AMC was also up 78%. So are we going to see a redux of the meme stock craziness that we saw back in 2021? Well, that's not my expectation. The first thing to realize is, particularly in the case of AMC, the shorts here are right. All right, that they are short, and they've been absolutely right on that call because the stock has been smashed. All right, so they're making money, even if they have to cover. They'd cover very profitably. GME, a little bit more extreme because this price action sent the stock to a more than an 18-month high. All right, so that's going to have the shorts feeling a little more pressure. Now there is still short interest in these names. GME, the short float's around 24%, and I read that the price spike yesterday was enough to cause about $800 million worth of losses to shorts. But I'm not seeing a redux of what we saw in 2021, where short interest was actually greater than the entire share float. Right now, it's about 24%. But it does look as though there's still too much money sloshing around the system. Obviously, we've got CPI tomorrow. I covered that in yesterday's video. The markets have had a pretty nice run-up into CPI. It looks as though the markets, in my opinion, are front-running a soft number. And interestingly, the VIX, I mean, it did pop up a bit yesterday, but it's still stuck at kind of year-to-date lows, or only just above, which would indicate there's not a lot of demand for hedging ahead of this CPI result. So when you consider the run-up in the S&P and the lack of response, well, it's a market that looks both confident and complacent. I think if the CPI print does come in hot, stocks could hit a bit of an air bubble. Obviously, we'll know more Wednesday morning New York time. That's what I got for you. I hope it helps. Good trading.